Steve Weiss, you have WTI is falling yet again. The market is falling as a result. 60% of S&P energy stocks are down more than 30% since June. Is that going to wreck the rally?
I don't think it should. I mean, if you take a look at what's driven the market, it's been healthcare, it's been utilities, it hasn't been energy. Energy peaked in June. I think the market's really got to get accustomed, particularly with the statements we just heard Carl talk about, that it's not economically driven, the weakness. It's driven by Saudi Arabia and OPEC trying to gain back share, make it unprofitable for the U.S. providers. But going back to the markets and the rally in December, I look back over the last 10 years. The S&P has been pretty steady about 70, 80% of the time. However, lots of divergence. The Russell, the NASDAQ, and the Dow haven't had great Decembers, and it's followed into actually January. So I'd be careful. If you're going to play a rally, play the S&P.
Josh, I asked this question yesterday. If oil cannot stabilize, can you possibly have a Santa Claus rally into the end of the year?
Well, Scott, anything's possible. I'll just start with that. But I think the point that you're raising is valid. In other words, yes, there's a huge tax cut for the consumer. Yes, there could be as much as $750 billion in benefit the longer oil stays this low. However, there are some internal things happening in the markets that could be impacted short term, and we're seeing that play out. You have to keep in mind that energy is about 10% of the S&P. However, energy capex is about a third of what's expected for 2015. And if we see meaningful ratcheting down of that kind of activity, it's not going to be great for the top line for the total market. Might even be a hit to earnings short term before the full benefit of lower gas prices hits the market. So I don't think this stuff should make anyone panic. However, it does have an impact. It does matter. It does affect the internals.